Hello, today is Saturday, June 27th, 2026. Here is your daily signal.
According to Fortune, political controversy has ignited in the wake of the Iran war, as Donald Trump has turned on top oil industry donors who reportedly spent nearly $100 million to support his election by calling on the Department of Justice to investigate them for price gouging. Even though crude prices have fallen back to pre-war levels, but gas prices at the pump remain high. These tensions follow severe oil market disruptions after the June 2026 Iran conflict, which not only rattled global crude prices but also worsened economic uncertainty.
Although oil prices have normalized, U.S.
consumers are still bearing the brunt of elevated fuel costs and a surge in inflation, now the top concern for 25% of American companies, nearly triple last quarter's rate.
A Federal Reserve CFO survey published this week confirms that 25% of firms now rank inflation as their main threat, and Moody's economist Mark Zandi says war-related price increases have already hit U.S. household budgets for both gas and groceries, with risks of further pain as the war wind down continues. Investigations by the DOJ could force oil companies to roll back prices and improve their image in the short term, but persistently high inflation threatens to slow U.S. economic recovery and escalate political disputes well into the election. This environment has also triggered a 3.4% surge in electric vehicle adoption, according to Goldman Sachs, as consumers seek alternatives amid oil price volatility. Meanwhile, major oil companies like Total Energies face intensified legal scrutiny on climate action, with a Paris court ordering reforms even as climate protests heat up. Next, we turn to the latest transformation in the tech sector.
The technology markets are surging once again as Micron Technology's blockbuster quarter reversed a global tech sell-off and, as Fortune and JP Morgan report, reset expectations for how Wall Street values the entire artificial intelligence trade in the post-bubble era. The AI industry is in the midst of an unprecedented $5.5 trillion capital expenditure binge, with major hyperscalers like Amazon, Microsoft, and Google driving investments higher than ever before. At the same time, industry watchers are observing a distinct shift away from bubble fears and toward sustained profitability. Micron's performance not only reignited confidence in chip stocks but also flagged a new reality. So-called memory tax is now central to AI costs, and investors are adapting to this industry shakeup. According to JP Morgan's latest mid-year outlook, the AI capex boom remains profitable for now, and debt markets have so far absorbed the shock. SoftBank CEO Masayoshi Son, meanwhile, is doubling down with $19 billion committed to AI infrastructure in the U.S., dismissing rival plans for orbital data centers. With this new competitive landscape, tech stocks could see continued upward repricing, and the race to expand infrastructure is likely to intensify as operational leverage and industry realignment bring new risks and opportunities. In the longer term, such heavy spending could permanently change the debt market and the structure of U.S. tech infrastructure. Let's move ahead to advancements in AI training using video games. TechCrunch reports that General Intuition is making a massive $2.3 billion bet that training advanced AI agents on millions of hours of real-time video game action data rather than just curated text and images will create more capable, adaptable AI systems. Traditional datasets for AI training tend to be static, but video games like Fortnite offer dynamic, immersive action data that some researchers believe mimics human intuition and decision-making better than previous approaches. With $320 million in fresh funding raised on June 25, 2026, General Intuition plans to scale up its training operation, leveraging video games not only as entertainment but as critical learning environments for next-generation robots and autonomous AI. If successful, this wave of action-based AI could set a new industry standard, as companies look for more robust ways to train AI for complex real-world tasks. In the near term, such agents are expected to show greater adaptability and judgment, while over the medium term, success with this method could accelerate broader adoption of game-based training throughout technology, robotics, and even autonomous vehicle development.
Now, onto the markets.
International equities mostly fell, with Germany and France both closing down. EUG, tracking Germany, slipped about 1% for the day and 7% this month.
Among notable movers, the UK EWU edged lower while Spain EWP eked out slight gains month to date.
In the US, the S&P 500 lost 0.7%, led by weakness in semiconductor stocks as stocks dropped over 5% today but is still up 4.6% month-over-month. Healthcare Roman 45 was among the best performing sectors today, rising 3% with momentum over 7% for the month, while real estate was also higher. Commodities showed mixed results. Gold GLD climbed by over 1% though is down about 8.5% this month, and silver SLV jumped more than 1.7% on the day despite being off sharply for the month. Oil USO fell more than 3%. Among gainers, Mike was the top mover, surging over 429% to close at 21.67, while SIG led the losers list, dropping almost 89% to 1.45.
That's it for today. You can find more news and details on our website. Goodbye.